income statement, also known as trading profit and loss account, and lastly, financial position, also known as the balance sheet. My name is Tony, and let us get started. In our previous tutorial, we covered two statements. Today, we will add one more statement, the balance sheet. We shall extract information from the total balance to help us prepare the first statement, the manufacturing account. We first start with the opening stock of raw materials, which amounts to 21,000. We add purchase of raw material amounting to 370,000. We add carriage inward 3,500. We less return outward. In this case, we were never given. We less closing stock of raw material amounting to 24,000. We get cost of raw material consumed or used, which amounts to 370,500. We add direct wages or labor, which amounts to 180,000. We add direct expenses such as royalties, which amount to 7,000, and we get prime cost. And our prime cost is 557,500. We add all the overheads incurred during production and include factory indirect wages, which amounted to 145,000. We have depreciation of productive machinery. Now here, to calculate depreciation, we were given the depreciation rate at 10%. We were also given the initial cost of productive machinery at 280,000. To get depreciation, we shall take 10 over 100 multiply by 280,000. We get our depreciation at 28,000. Our general factory expenses amount to 31,000. Factory lighting, factory rent, and factory insurance were all apportioned in a fraction of 5/6. And to get the apportionment of factory lighting, we'll multiply 5/6 times the initial cost of factory lighting before apportionment, which was 7,500. We get 6,250. Factory power amounted to 13,700. Factory rent was also apportioned in the ratio in the fraction of 5/6. Is also multiplied by 12,000, which was the initial overhead of factory rent before apportionment. When we multiply, we get 10,000. Factory insurance was also apportioned in the fraction of 5/6. We multiply by 4,200, which was the initial overhead of factory insurance before apportionment. When we multiply, we get 3,500. Our factory cost amounts to 237,450. We add it to opening work in progress, which amounted to 13,500. We less closing work in progress, which amounted to 15,000. When we add our prime cost, which amounted to 557,500, and the total factory cost, which amounted to 235,050, we get our cost of production, which is 793,450. Cost of production is transferred to the right hand side of the account for two main reasons. Number one is to help us balance off the account. Number two, the value all the figure of cost of production will be used during the trading account. Our next statement is income statement or the trading profit and loss account. Trading account is majorly prepared to determine the gross profit or gross loss. We first start with the opening stock of finished goods. In this case, it amounted to 38,900. We add cost of production, which amounted to 793,450. We less closing stock of finished goods, which amounted to 40,000. Our cost of goods available for sale is 792,350. Now, how do you get the gross profit? Gross profit is equal to sales minus cost of goods available for sale. Therefore, we will subtract 1 million from 792,350 to get the gross profit. In this case, our gross profit was 207,650. We close the account by balancing it off. Our next statement is the profit and loss account. Profit and loss account is a type of statement that determines net profit or net loss. It identifies all the expenses that was incurred in the administrative work and they include accounting machinery depreciation, which amounted to 2,000. Lighting was apportioned in the fraction of 1/6. Initial cost of lighting was 7,500 before apportionment, and when we multiply, we get 1,250. Administrative salaries amounted to 44,000. Sales representative salaries amounted to 30,000. Commission on sales amounted to 11,500. Rent was apportioned in the fraction of 1/6, and its initial overhead before apportionment was 1,200. When we multiply, we get 2,000. Insurance was also apportioned in the fraction of 1/6. Its initial overhead before apportionment was 4,200. When we multiply, we get 700. General administrative expenses amounted to 13,400. Bank charges amounted to 2,300. Discount allowed amounted to 4,800. Carriage outward amounted to 5,900. When we add all our operating expenses, we get 117,850. Now, how do you get our net profit? Our net profit is equal to gross profit minus the total of operating expenses. Our gross profit was 207,650. When we subtract from our total operating expenses, our net profit comes 89,800. We close the account by balancing off our last statement is the balance sheet. Balance sheet is a financial statement that shows the financial position of a business. It is also called a statement of assets and liabilities. Assets are items that are owned by the business. They also generate income to the business. Assets are categorized into two. We have fixed assets and current assets. Fixed assets are those items that can last more than 1 year. In this case, our fixed assets were productive machinery, which amounted to 202,000. Accounting machinery, which amounted to 10,000. Our total fixed assets is 212,000. Current assets are those types of assets that cannot last more than 1 year, and they include stock of raw material, which amounted to 24,000. We have finished goods, which amounted to 40,000. Work in progress, which amounted to 15,000. Debtors, which amounted to 142,300. Cash at bank, which amounted to 56,800. Cash in hand, which amounted to 1,500. Our total assets, both fixed and current, sums up to 491,600. At the right hand side, we have the capital and the liabilities. We first start with the capital. Our capital figure amounted to 296,800. It's added to the net profit, which amounted to 89,800, less drawings, which amounted to 20,000. Therefore, our net capital is 366,600. Somebody may be asking why we add net profit to the capital and we subtract it from the drawings. Profit, when plowed back to the business, it increases the capital structure of the business. Drawings reduces the capital structure of the business, and that is the reason as to why drawings is subtracted and profit is added. We had current liabilities such as creditors, which amounted to 125,000. We were never given any long-term liabilities, but if given, they should be added to the net capital and that of current liabilities, and so we'll only add our net capital to that of current liabilities, which is 125,000, and the two sums up to 491,600. Kindly please check on the workings for each statement below. For manufacturing account, income statement, and the balance sheet. For more educational videos, visit Study Portal 254 YouTube channel, and don't forget to subscribe. Bye bye.